After strengthening for several weeks to its highs that we last saw about 10 months ago against the US dollar, new reports about the possible arrest and firing of Finance Minister Pravin Gordhan this week sent the rand dropping again to above the 14 rand to the dollar level. Now, how should investors best position themselves and take advantage of these movements in the currency? Well, we'll find out in the next few minutes as we joined in studio to discuss these themes with Craig Gradidge, who's the co-founder of Gradidge-Mahura Investments, and Petri Redelinghuys, who's an independent trader and stockbroker. Gentlemen, so good to have you with us today. Have you both been sleeping well over the last 3 days? I've been panicking and having heart palpitations. But Craig, perhaps let me start off with you. We've seen these headlines before beginning of the year where the Hawks were investigating the finance minister. They've resurfaced after a significant amount of calm. What's your reading on the dynamics and how they'll play out, especially given that more representatives have come forward in support of the finance minister?
Yes, I think trying to forecast political outcome is as difficult as trying to forecast the economy or the currency.
So you don't have the crystal
ball?
So
I don't have a view on how it will end. I have no idea, to be honest. I think the important thing is that I understand the kind of risks that it presents to our clients in their portfolios, and ensuring that our clients are adequately, hedged against a worst-case scenario. So yes, the currency has been quite volatile since the news broke. Some bad news and then some positive news and then some bad news again. So I wouldn't get caught up too much in the short-term movements.
Mm-hmm. Petri, I take it you'd also agree. Take the cautious stance.
Yeah, I mean, you can't tell what these guys are going to say or do next. So I don't think speculating on it there's any merit in it. But like Craig says, I think there is a lot of short-term volatility, but that's essentially all it is. I think the longer-term trends will play out in the long run.
Let's talk about those risks, and in particular from an investor's perspective, as Craig did allude to. Last year, I understand when we had the Nenegate saga, we did have some representation from the PIC that they lost a significant amount of capital on their portfolios, given the weakness in the rand. How were you both strategizing to ensure that, as Craig mentioned, you hedging against potential losses from the currency volatility, which could impact on your clients' portfolios? Petri, let's start with you.
So, all right. So the nature of the trading that I do, I think, is slightly less long term. So when volatility like this crops up, it does sometimes present opportunities. I'll admit this particular spate of volatility has been somewhat unexpected. However, I think that the impact of this is not nearly as drastic as what it was with Nenegate. I think we were on the back foot already, and that was that exacerbated the situation, made it a lot worse. At this stage, we were in a strengthening trend on the rand. We are finding a lot of support within the emerging market realm that is busy developing and growing. Mm-hmm. And I do honestly think that this is a short-term move, and I think that perhaps this is presenting an opportunity for us to back some of our own players and to take positions on the rand, looking for it to strengthen.
Name drop. Does that mean buy industrial counters?
That means buy resource counters, for me at least.
Really?
Yeah.
Craig, from your perspective?
Yeah, so you've got a trader and you've got a financial advisor.
And an investor for the long term, yeah.
When I sit with a client, irrespective of whether the currency is strengthening or weakening, you've got to understand the risks that a sharp currency movement presents to the particular client you're dealing with. So if you take income clients, for example, they're looking for income, and typically they are risk averse, so can't deal with volatility and downside risk generally. So you've got to understand, someone looking for income, you're going to have cash, bonds, property. What are the risks to those asset classes? What are the risks to inflation? And the currency presents a significant risk to inflation. So in a portfolio like that, yes, you're trying to maximize income, but you've got to be aware of the risks to that income. So you would then have offshore exposure from the start. If the currency has been strong, or if it looks kind of overvalued, you may have a bit more exposure. If it's after a period of weakness, you may have a bit lower exposure and wait for some kind of pullback before increasing it to the level. So it's always a trade-off, understanding the client's objectives and understanding the risk that the currency presents to that the strategy that you would present to their client.
But given that you're both following different investment strategies here, perhaps, then how often would you review the necessary investment strategy to realign and configure with where the currency is at the moment, from a long-term perspective?
Yeah. So when I review, I'm looking for structural changes on the risk side. Are we now moving from a case where the currency can never get back to 10 to the dollar, and what's happening to our resources sector, things like that. So I tend to look a lot more strategic in terms of understanding how risks have shifted.
Mm-hmm.
I think Petri can answer for himself, but there's perhaps more.
So a good example would be the trade that you and Mashima were talking about a little bit earlier. Grinrod with the inverse head and shoulders pattern. It looks like it's going to go back up to 29 Rand. That, in my book, would be a sort of medium-term trade. So that's a 6 to 18-month trade that you take there. So if you were to take a trade like that with a medium-term outlook, you'd have to, I'd say, at least every 3 months, just sit back and say, is this thing still in the right trend, and just keep an eye on it on an almost consistent basis. What you're looking for is for the trend reversal situation there, and if that trend reversal comes under pressure or it seems to be failing, then you'll have to reevaluate. So it is not as long a term outlook. The objective is different to generating income or whatever the case is. We're going for capital growth, really, and we're trying to do it in a short time frame, 6 to 18 months, or sometimes intraday trading, that kind of thing, which is a lot riskier. But in this particular case, I think you'd want to almost every quarter just reevaluate the stocks that I hold. Is the macro picture still in place for these things for my bullishness to be correct? And if not, where else can I place, my bets? Bets is a bad word. I shouldn't have said that.
That's okay. I think the audience will certainly get what you're trying to say. But I think in closing, very briefly from the both of you, be cautious about the volatility in the currency, but also don't panic too much. Go back and evaluate your independent investment strategy. That's to the viewers that are watching, right?
Correct.
100%. So, volatility is a permanent feature of the market. The reason it's volatile changes. What you can control is your response to that.
We'll leave it on that note. Gentlemen, thank you so much for your time today. Greatly appreciated. That was Craig Gradidge, who's the co-founder of Gradidge-Mahura Investments, and Petri Redelinghuys, who's an independent trader and stockbroker.